Let's bring in Robert Reffkin. He is CEO of Compass. He joins us here on set. Great to have you back with us.
Glad to be here.
You know, this just brings me right back to the beginning of the year, talking with you, and you said, you know what, the bottom's in for housing. I'm going to call it right now. And so far, it does look like the data is moving in your favor. Bottom or not, it does seem to be stabilizing. We do seem to be seeing some green shoots. What are you seeing on the ground across the U.S. in your different markets?
So across the board, there are more buyers than sellers. Buyers have accepted 6-7% mortgage rates as a new normal. We're seeing prices increase every month this year versus the prior month, and now it's just 3% lower than it was at the peak last year. The issue that we have is there's just not enough inventory, and that's because 30% of homeowners are locked into mortgage rates at 3% or below, and 70% of homeowners are locked in at 4% or below. Great time to be a home builder because they're benefiting from the price increases that are a result of low inventory.
Yeah, I spoke to Cheryl Palmer from Taylor Morrison this morning, and certainly the home builders do seem to be moving to fill in that void to the best of their ability. Are you seeing that in terms of where you're generating sales, your agents are generating sales as well? And if so, how much are things like incentives playing a role in that?
Yeah, so there are definitely incentives and buy downs bringing mortgage rates down by 2 points in a number of our markets. But there was already a trend of not enough inventory, and a second trend of people want things that are move-in ready. They want homes that are prepared. There's a product at Compass called Compass Concierge, where we prepare homes to make them stage, painting, deep cleaning, and just make them move-in ready. It's one of our best products. But now there's just not enough inventory of existing homes because people are locked into low rates that home builders are meeting. They're meeting that demand. We actually saw last month the largest amount of housing starts since 2016. And that's because home builders, their sentiment index improved for the first time in over a year.
Tell us about two things, two A's, ARMs and Airbnb. So adjustable rate mortgages, are you seeing people pick those more now that a lot of people think we're near the top as far as where rates are going to go? And then the last time rates were this high, it was a lot harder to sort of monetize a property that you owned if you weren't going to live there anymore. So has that affected the inventory issue in a way that you can really see?
Yeah, so we're seeing people that are buying because they have a new kid, they just got married, another life event or a new job that have to buy. Instead of selling their pre-existing home, they're just renting it out and taking the financial arbitrage of high rents and low mortgage rates. So we're definitely seeing that, whether it's an Airbnb or not. But the issue that we are seeing is we need to have an unlock of inventory. It's probably going to happen when mortgage rates get to 5.5% in a sustainable level. At that point, I would expect there to be a flood of inventory hitting the market, and it will feel like the pandemic craze all over again.
And what are you seeing on adjustable rates?
So on adjustable rates, we are seeing an increase in adjustable rates. But the topic around adjustable rates, which I think people don't fully appreciate, is around 30% of the people that are locked in at 3 or 4% mortgage rates had adjustable rate mortgages that are 5 years, 7 years, or 10 years. So the value of a 5% ARM they got in 2022, in 6 months, it's not that valuable anymore. You only have another year, year and a half. And so I think there's going to be some new inventory entering the market, even if rates don't come down because of those ARMs they're getting less value over time.
Dynamics around agent growth and retention, something we've talked about in the past.
Yeah, so we're happy to say, and we shared in our first quarter, that every month in the quarter we hired more agents than the month before. Every month in the quarter we lost less agents than the month before. And so it's a good time for Compass. It's still a competitive environment. There's 1.5 million agents in the country. 5% of them left the business in the last 5 months, and so we're seeing agents leave the business. That said, Compass agents are outperforming.
Stock's trading at about just under $3.50 a share. You went public at $18 a share. Investors missing something here? Like, how do you react to the fact that we have seen the stock? I realize it's rallied since the start of the year, but it's sold off dramatically since it went public.
Yeah, look, we IPO'd in the hottest real estate market maybe in history. The environment that we exist in right now is one where the backdrop is mortgage rates went from an all-time low to a 20-year high in less than 9 months, creating the sharpest decline in real estate transactions in the history of the country. There are many brokerages that aren't surviving. I'm really pleased to say that I shared in the last quarter our commitment to being free cash flow positive for the second quarter, the third quarter, the fourth quarter, and the full year.